How's it going, everyone? I thought I would do a quick video today on the series that I started in the last video, talking about building a playbook, right? Helping you guys build a pretty simple playbook that you can use to help you spot and take trades. Now, in the last video, I got a ton of feedback from that. Just hearing a lot of positive stuff about people seeing that trade and actually taking it. I actually had one guy send me like over a $20,000 trade that he was involved in, just trading that consolidation breakout. So that's pretty cool to see. I really appreciate all the positive feedback on that. The one thing I want to do though in today's video, I want to kind of branch out a little bit, right? Before we get really crazy into setups, I want to walk you guys through the two most important things to go along with these setups, right? The setups are actually the easy part. The hard part is the context and the nuance. If you followed me for any period of time, you understand that to me that is where the edge is, right? Any person I've ever found that has real edge, it all comes from context and nuance. And I'm going to go into a little bit about what each one of those mean and kind of how to apply them. And I'm actually going to walk through, right here on the screen you can see I have NQ pulled up, and I believe this was on the June 2nd. So June 2nd, I'm going to walk you guys through an entire day of price action on the 1 minute chart on NQ futures and kind of show you guys what I mean by context and nuance, because it is extremely important. The setups you take, like the individual setups, like that can be, something with volume profile, market profile, VWAP deviation bands. It could be EMAs. It could be RSI. It could be market divergences, right? Correlations, anything like that. It's irrelevant without context and nuance, right? Context and nuance is where the edge is. And I may be getting into semantics a little bit, talking about context and nuance, but they actually are slightly different. And I'm going to go into how they're different, why they're different, and why it matters, okay? So first off, let's talk about context and nuance real quick before we start looking at the chart. I'm going to briefly read this little definition here, kind of the contrast and compare the two, but pay very close attention to the words in this, because they I promise you they will matter, okay? So context versus nuance. Context and nuance are two essential elements in understanding a situation, okay? Context provides the background or setting in which something is happening, while nuance refers to the subtle differences or shades of meaning within that context. Context helps to give a broader understanding of the overall situation, while nuance allows for a deeper, more nuanced interpretation of the overall situation within that context, obviously. Okay, so both context and nuance are crucial to understanding the totality of a situation, if that makes sense. Okay, now keep that definition in your mind, right? Context is the bigger picture, right? The background, kind of the whole theme of what's going on, and nuance are going to be these little differences that you're going to spot inside of your setups and stuff like that. Okay, so nuance is going to focus on maybe stuff around your setups, how maybe price approached your setup, and context is kind of like this broader overview. Broad can mean a lot of things, right? It could be, you could have a broad overview even with a 1 minute chart. However, typically it is higher time frame, or also it can be thematic, right? Like there can be this background thing of I don't have an NQ daily chart pulled up here, but as we all know right now, the market is extremely bullish. So that even being in your head, right? You even just conceptually thinking about that while you're trading, maybe not intentionally, but subconsciously, is giving you giving you a tip on which direction the market could or should be going. Okay, so really want you guys to think about that. Also, before I actually go into this chart and start describing all this stuff, what I want you guys to I'm going to give you guys a really good example that happened today, all right? Or is actually on this day. So it's been Monday, June 2nd. So Monday, June 2nd, I was working with a buddy of mine. He's an aspiring trader, right? He's been trading for a couple years, and he's trying to learn, so I'm kind of like mentoring him, helping him out. It's for free. He's my friend, right? There's no money or anything like that. And we're working together, and I'm trying to help him become a good trader, okay? Now, I'm assuming he's like a lot of you. If you are struggling, if you're not struggling, you already get this. But if you're struggling, you think it's some technical thing that you're missing. And that's what he always says to me. He's like, there's something I've got to be missing, something I got to be missing. And he's looking for like technical things, right? And what he's actually missing is context and nuance. All right. If you ever want to make money trading, I'm telling you right now, context and nuance are how you're going to make money. It is not the setups. We're all trading the same shit. It might look different to me. It might look different to you, but we all are trading the exact same shit. So you studying 10 different new setups is not going to cure it, right? If you're strategy hopping and this or that or whatever, it is way less relevant than you think it is. I can't tell you how many times I've traded complete nonsense. Like I literally just made something up and I would trade it, and I was able to make money doing it. Why? Because I was using context and nuance to just kind of form a trade around kind of like the thematic idea, if that makes any sense. So enough of the boring stuff. I'm going to walk you guys through. There's going to be a ton of different setups in here I'm going to go over. In future videos, I'll go more in depth on maybe each one of these setups. But for right now, I'm going to cover a ton of different setups. And some of them will be in my course. You do not need to buy my course. You don't need to buy anything from me. This is just free information. This is all you need. Everything I learned for free. So you don't need to do that. But I do have a course where I give out my setups. Like I said, my setups don't really matter. It does not matter. You can trade whatever you want. I truly don't think it matters. But anyway, let's get into this. I'm going to give you a bunch of different setups. So feel free to try all of them. But like I said, they're not what's important. I want you to understand how to actually read the market. And that's going to give you the context, and then spotting the little nuances inside of that is going to give you the edge. All right. The edge is in the nuance and the context. So let's walk through NQ for the day, and I'll kind of talk you through some of the trades I took and some of the things that my buddy that I'm mentoring, some of the stuff that he took and why it was maybe not the best place to do that. Okay, so hopefully this video helps you learn something, and let's take a look at the chart here real quick. All right, we're going to start at 9:30, right? The New York cash open. We get this big push up, right? Big is relative. We get this big push up. I start selling somewhere up in here, okay? I'm expecting a capitulation trade, reversal, whatever you want to call it. Essentially the market flipping and going back the opposite direction. Now, a lot of people are going to look at me, and I have heard this a million times. Oh, you're front running the idea. You're front running the idea, trying to like pick a top and stuff like that. And that is 100% true. That in most situations, if you're just doing it randomly, is a bad idea. However, if you have context and you spot little nuances, you can see where that trade has a higher probability of working. Where if you just took that trade blindly all the time, like most traders would, you're never going to make money doing that. So the key is spotting those little tiny differences. So let's look at this capitulation trade we have here, right? So big spike in volume. Obviously, the market opens. You're always going to see that. We get this big push of volume up, right? Well, look at the volume right here. Okay, we have a big spike in volume at 9:39. I got short somewhere up in here. Okay, now if you notice on my chart, you'll see this pink line. That is a key level that I have. Okay, so we have overextension, right? Market has barely pulled back to the 90 MA. That's the 90 MA right there. The market has barely pulled back to the 90 MA on this move up. Essentially went straight up. It gets to my key level. It dumps a ton of volume. That is a really, really good place to take a trade. Am I saying that just because I took the trade and made money on it? No. I'm saying that because of the context, right? We get this big push up with essentially no pullback, straight off the open. We're running up. We're not getting any type of test of even the 90 MA. All right, nothing. Just a straight run up to this massive key level of resistance up here. And we get a big dump in volume at the top. That, to me, is a great trade. It makes sense why someone would take that trade. Now, I started shorting it down here. I took a short here. Quickly didn't go in my favor. I took a stop. And then I think I actually took, it was like 1 or 2 entries right here on this red candle. Took a tiny little stop. The price didn't look like I wanted it to. I didn't let it go hit some arbitrary target up here, right? I read the price action in front of me and saw that it just wasn't going to work, right? So I got out. Took small losses, shorted somewhere up in here, and got a big winner. I think I took it down into here somewhere, I believe. Okay. Now let's look at how the day started to kind of develop, right? So this is right off the open. Big push up, immediately sells back off. All right. Now, obviously, I only took it to somewhere in here. I did not expect it to go all the way down. But as you can see, we get this really consistent, smooth move down. We have a nice pullback here into the 90 MA. I think that is a really solid trade. That's something I teach a lot of my friends and other traders, just a basic pullback, right? And then we get this big push down. This white dotted line right here is going to be the open. The green line is going to be VWAP. These are just VWAP deviation bands. So we get this push down through the open, and we reject somewhere down here. I mean, you could say it's also a deviation band, but really I don't think it has anything to do with that. But anyway, we get this rejection, and we start pushing back up. Okay, we create a higher leg, right? Okay, so now we're up in here. This is where it gets interesting, right? For me, there's no really trades in this little section right here. I don't see anything there that interests me, okay? We get back above here, and now we're kind of testing the open, right? We push back above the open, now we're holding it. So the question here is, do we think that it can hold above the open? Because to me, I think the open is a really good place to have your line in the sand. A lot of people use VWAP. Ironically, they tend to be, or they are closer together right here. But it can really, it doesn't really matter to me. I always kind of use the open, or the ETH open, as my line in the sand. So we get this push up to it. We get a push down. We get a push up. And price starts consolidating, right? Near the top of this range, okay? So we get kind of this like flat top breakout is what I call it, right? You see price kind of consolidating in here, kind of bouncing around, and I'm watching this. And if you've been trading for any period of time, right, any period of time, you have witnessed, maybe you haven't like noticed it, but you have looked at a chart, whether it be a 1 minute, 3 hour, 5 hour, day, week, whatever, this formation right here. If you currently look at the NQ daily chart, we also have this flat top breakout formation currently on the daily chart. Okay, so price is kind of consolidating in here, and this is where the nuance and the context really start to play out. Okay, if we were bearish, right, if we thought price was going to go down here, would price really be holding above the open? I don't think it would. Okay, if we were really, really bearish, would price be consolidating in this tight little range above VWAP? I don't think so. If we were bearish, we would do that. If we were going to break down, would price be consolidating near the highs of this little range that it created? Again, I don't think so. So that's context right there. And my best trade of the day was actually a long from the open because of what I just described to you. Now, if I blindly said, oh, this is a flat top breakout, that means I'm going to get long. There are how many? You're going to get trapped a million times a day. There's a million of these setups that completely fail and trap you. It happens all the time. And I'm sure you guys experienced it, right? You've taken setups that look good and they don't work. And you're like, well, why the hell didn't that one work? And that's because of the context and nuance of the situation. What is the situation around the setup? Setup matters less, situation matters more, okay? So obviously, I'm not going to pull it up, but if we're looking at the NQ daily chart, you don't have to be a genius to know that it's pretty bullish. And like I said, we're forming a flat top breakout on the daily chart. That's another tip that's another tip to you. Okay, we should probably get long, right? If there's a good spot to get it long, we should probably try and get long, okay? So I took this long right here. I think I got it actually a really good price on that. I think it was like I want to say it was 304 maybe. I got long here. Obviously I didn't ride all the way up here. I took it off somewhere up in here. This to me was a very, very high probability trade. If you're someone out there that doesn't grade trades or you don't believe in it, I actually talked about that on the every Tuesday morning at 8 a.m. Eastern time. I get on Wolf Financial with a bunch of other futures guys, and we talk about the markets and stuff like that. If you guys ever get a chance, I suggest you stop by and listen to it. Great show, a lot of cool topics. But this is the type of stuff that we talk about, right? Grading setups. Should you grade setups? Should you not grade setups? A lot of amateur traders don't believe in grading systems, right? They just want to take if it's a good setup, it's a good setup. If it's a bad setup, it's a bad setup. And in my opinion, that is a very not a great way to go about things, because you're treating every setup as it's the same and not adding nuance or context to the level that you could be adding them. So like I said, if we just took this flat top breakout blindly, most times we're probably going to get trapped. We just are. It just somehow this is going to chop or it's going to slap down, and we're just going to get smoked, right? Trying to get long into this, because this obviously is a bullish setup. So if we were to grade this setup, we would give it a higher grade Uh, because of contextually and looking at nuance, we're expecting the price to keep pushing higher. Now, we get this push up. I really don't see any trades inside of here. And then once we get to right here, okay, once we get to here, we're starting to form like a little range. This is where stuff gets really interesting, right? This is a setup I talked about in the previous video. Simple consolidation breakout or breakdown, okay? We talked about before. If you just trade this setup blindly, you're probably going to lose. You need to use context and nuance. So our context for the day is bullish, right? We have, I think Powell was speaking at like 1 p.m. or something like that. So, assuming that he was going to say something positive, which was kind of like the thought, that kind of gives us a little bit of hint. Okay, we already have the hint of the bullish pattern on the daily. Then we have the other hint, right, of the Fed, saying something positive. So right there, two things contextually that can kind of tip us that, okay, hey, this may be, a good time to get long. Okay, so the market comes up, it makes a level, or it tags this level again that we created over here, and it pushes down. Now we have 1, 2, 3, 4 tests of this low. Okay, now a lot of people will look at this and say, well, we're testing the low a bunch. That means it's probably going to break, right? Like, the probability is probably it's because only tested the top of this twice. And I think that is more bullish than bearish. A lot of people, I was kind of surprised. We're thinking this was something that was bearish, and I disagree with that. Okay, if we were bearish, we would have went through it. So anyway, we reject again here. We push to the top of the range. We reject again. Now this is where I get interested in. Okay, this is almost exactly the same setup that I've talked about multiple times on my YouTube, on Twitter, on Patreon. I described this setup multiple times because it happens all the time. All right, we get this push up. We fail to even tag this level up here. I mean, obviously it's close, but it's not exactly there. Okay, we create a low. We try to push up again. We create a low. Okay, so now we have this bearish pattern forming, right, inside of our consolidation. Now, if we just said, hey, we're trading bearish patterns, again, that's not looking contextually at the situation. We already had the Powell speaking. We're assuming he's going to say something positive, and we have, however knows how long, bullish trend on the daily. So we create another lower high. If we were going to break down, this is the time that it would happen. Okay, it would happen right here, and it didn't happen. So I think here was a great spot to get long. Not getting long thinking the trade, this trade's for sure going to work. No, but look how tight we can put a stop here. Let's just say we get in down here. We already have our level drawn. We already know where the bottom of this range is. Even if we have no idea, even if we don't know what we're doing, all right, what's a little nuanced thing that we can do? What's a little nuanced trick that we could add to our playbook here that would kind of give us almost a free edge? This is so simple, and people never do it. Let's look at math, right? Let's just use math in our favor, okay? If we get short here, or if we get long here, okay, at the bottom of this range, where pattern-wise it looks bearish, but what if we could put our stop really tight here, right? Because if it breaks, we'll call it these lows over here, right? These little wicks. If it breaks those wicks, it's probably not a good trade, right? It's probably going to break down and continue down and to who knows where. But what if we get long here? What if we just make an assumption, right? Let's just say, okay, who cares if we win or lose on this trade? But look how good the risk reward is on that, right? We're risking, let's say 1, 2, 3, 4, we'll call it 5 points, right? To make what? How many points is this? 5, 10, 15, we'll call it 25 points at least, right? If it retests the top of that range, that is 5, 6 times your reward, your risk. If you win, that is a great trade to take. That's a little nuanced piece to think about. Even if you don't understand the contextual stuff yet, that's just a really simple little nuanced piece. Okay, price grinding its way down. It's holding down here in this range. However, on this candle, it kind of fails to break, or this candle right here, it fails to break this low. Right here is a good spot to get long. Do you know if it's going to work? You have no idea. However, what you do know is your risk is tight and your reward is high. Now, back to the contextual stuff. Okay, let's say we don't take this trade. I did not take this trade. Okay, I wasn't looking at the chart, wasn't paying attention. So price comes back up here, right? We reclaim the 9 EMA. We break this downtrend line right here. Okay, so we retake the 9 EMA, which if you're retaking the 9 EMA, obviously it's situational, but it can be extremely bearish if you're getting below it and holding, and if you're getting above it and holding, that's extremely bullish. So that's a little setup that you guys can use as well. So we get back above that 9 EMA. we're holding above that 9 EMA, and we're staying above it, okay? And on this candle right here, we break out well above that 9 EMA, and this next candle comes down and tests it. So I think this is the absolute best place to get involved. Why do I think that? We have a bearish pattern, right? We try to break through the bottom of the range. We fail to do that. Okay, that's one thing in our favor. We hold above the 9 EMA. That's another thing in our favor after testing it twice. We break the downward trend line. That is three things in our favor. We have a Fed speaking, assuming the assumption was positive news. That's four things in our favor. And we have a massive, massive trend on the daily chart. That is five things in our favor. It's almost insane to not take that trade. Now, that is not a hindsight thing. That is really what's happening. As these trades were developing and as this day was happening, I was talking with my buddy that I'm mentoring and just a couple of friends of mine, right? Like, we're talking through this. These are easy trades that happen every single day. Now, this particular setup may not happen every day, but stuff like this happens all the time. Like I prefaced in my previous video, right? You saw me go over this exact same thing, and it happened again, and it happens all the time. Now, if you're just taking blind trend line breakouts, you're never going to, not to say never, but you're likely never going to make money. If you're taking, if price gets above the 9 EMA and you're just blindly taking those trades, you're probably never going to make money. If you're just buying the lows of a range, just hoping that it'll go up and not really worried about risk or anything like that, or understanding how to manage risk, you're probably not going to make money. But when you combine these things and you look at little nuances and little contextual things, you can really build these great, great setups. So I think this is an A+ setup right here. Like down here, I think that's a super high probability setup as well. Now, let's say, for example, you missed this trade, which I think, like I said, this is the golden trade right here. I think this one down here was as well. We get up to the top of the range. Now, this is where I kind of start talking with the guy I'm helping, and he saw this candle right here, right? This wick at the top of the range. And he felt like it was bullish, right? Like he was convinced we were going to see higher prices, but he was like, that candle scared him because obviously it's kind of like that wick candle. I don't even know what the technical word for it is. I don't really pay attention to that stuff. But he saw like kind of doji candle, and he got scared. He's like, well, what if this doesn't work? And he's right. We really don't know if it works. Now, obviously, contextually and looking at little nuances, right, we can kind of see this is a high probability trade in reality. Again, not hindsight, was talking through this real time. But we come down and we test that 9 EMA. When we test that 9 EMA, we instantly start absorbing, all right? Price starts getting bought up. Price starts going up right here. Even if you have no clue if this trade's going to work, you have no idea, even if you took away all the stuff we talked about, look at your risk on that. You could risk three points on NQ. When the hell can you ever risk 3 points on NQ? I mean, that is a great, great, great trade right there, okay? Especially when we add all the context that's going on and the little nuances, right, of holding above the 9 EMA. You're adding in, right, all these different little factors together and building out this big picture on this really small scalp to give you a super high probability trade as well. Now, price breaks out of the top of this range, and this is where my buddy takes his first trade, right? The guy that I'm mentoring takes his first trade. He missed out on all this action through here, a bunch of clean trades in here, pullbacks, flat top breakouts, consolidation trades, like we talked about this key long right here. He missed a key long here. He gets long actually on the Tesla 9 EMA here, okay? Now, obviously, hindsight, we can see the trade played out. It didn't work. But I think in real time, that's an easy trade not to take. And when him and I spoke about this and we're talking, I actually wanted to get short here. I think that was a good place to get short. Why? We already had this grind up, right? Kind of grinding in here. We get this, grinding is not the correct word. We get this consolidating here towards the top of the range. We break out. We start consolidating higher, right? We're consolidating higher. That's the key point right there. Okay, all the stuff we talked about in here. We break out again, right? So we've broken out twice. And price is getting up into here, right? And kind of starting to go sideways. That to me is a very low probability long. Not saying that because it didn't work. I'm just saying that because contextually it doesn't really make any sense. The points to get long were here, were to here, back in here when you had a clear setup. Up here, that's just a simple like pullback or retest that 9 EMA. I don't think that's a quality trade. So we still kind of consolidate here for a minute towards the top of the range, right? Like this kind of this bull flag down here. However, we're doing that again after we already broke out twice. So for me, the third try at this breaking out is low probability, right? It doesn't make as much sense as it did down in here to get long. So my buddy and I are on the mic live talking through this. We're watching price kind of chop around and come in, not chop, that's not the right word, kind of consolidate around in here. It tries to, like we talked about, that flat top breakout, tries to break out again. This time it fails, right? So now we have our range. Okay, once this candle's in, we have this range formed like we talked about. Okay, so we're watching price. Price pushes back up again here. Okay, Powell speaks at 1 o'clock or something like that, so it was coming up here pretty soon. Now, at this point, I asked him, I said, what do you think here, right? As price was coming up through here, we're talking. And he's like, we're going back and forth. And I asked him, like, what do you think here, long or short? Well, at this point, he's like, he doesn't really know, right? Because he tried to get long up in here, didn't work. And now he's kind of like shell shocked. He missed out on a lot of the good moves. And I said, I think in here is a high probability short. Why is that? Okay. What is the reason for me thinking this is a good quality short? I don't think it's a good quality short. I just think I can manage my risk, right? Because I have price failing here one time, two times. We've already consolidated. Okay, we've already went through a whole entire sequence of consolidation for like an hour, and then we start consolidating again for another 40 minutes, whatever it is. So for me, the probability on the short is extremely high, even though that's not even what I'm thinking about. I'm just thinking, okay, if I use math in my favor here, I think this is a good spot to risk from. So when this candle forms, we get this tiny little wick. I get short, put a stop above here. I'm risking 2 points. Who gives a shit at that point, right? That's how you can use that little piece of nuance, right? I'm saying, okay, I understand that, we have positive news. You probably should be focusing on longs. However, I'm risking 2 points on this trade. 2 points. Who cares if I'm wrong? It doesn't matter. So, and like I said, I actually do think it is a high probability trade because of us failing, and the odds of us consolidating twice in a row and then going up probably aren't that high, even though that is what happened. I do think this actually is a high probability setup, but that's kind of like a hindsight thing. When this was happening, I liked it for different reasons. Okay, but yeah, that's kind of what happened. So I get short here, and I get out somewhere in here. Okay, price wicks up, or price starts to wick on this big candle. We get this dump in volume like we talked about before. Price gets absorbed. We start pushing back up. We slam down again. Now this is where it gets interesting. All right. If we're going to break down, if we're going to lose both of these ranges that we just created, right? The range back here and this range up here, right? This consolidation periods. If we're going to lose these, when this candle breaks right here, after 2 times consolidating, this is the time where the short would happen. Your short is right here. If that does not work, you might as well get long right here. So if you get 2 periods of consolidation, right? And let's say price broke out to the upside here, and we're consolidating instantly again after we just broke the other consolidation. This is really interesting to me. And this is kind of where I'm like, if you're going to fail, the first time you lose this range is when you're going to fail. So once price did not fail right here, right? We broke down lower and it immediately reclaimed this range. I think right in here at that retest of the low of that range was, again, extremely high probability trade. This is an incredible trade to take, a very, very, very simple trade to take, because we're looking at the context, that we're looking at little pieces of nuance in there, right? We have the market kind of start to roll over. We break below our second consolidation. We immediately buy back up into it, push higher, fail to make a high. Okay, so everyone's thinking, okay, well, maybe it is bearish. And then we hold this level down here. You cannot find an easier trade than this to get long. You can't. That's not a hindsight. These are trades I was actually taking. Now, obviously, we continue up. We break out. Again, price rides the 9 EMA. We're getting kind of later in the afternoon at this point. So for me, I'm hands off here, right? I think I took a short in here, but that was just like a feel scalp. That wasn't really, that was just kind of a rhythm scalp, I call it, where you're essentially just trading just kind of off feel. I don't recommend most people do that, but that's just me using, like I said, nuance and context, but really without a setup. I don't advise most people do that. But anyway, made a little bit of money there. Price rolls over. We lose this level here, and then we start getting news. Now, once you get news, that's different, right? You're looking at nothing but the context of the news. It's positive, um, not always. Sometimes it can do the complete opposite. But if it's actually positive news, you're going to just get stuff like this where it just goes straight up, and it's pretty much just find a place to get on board. So maybe this wick right here. Um, but again, think about the context we talk about. Think about the nuance, right? If the market is going up like this on no news, no way in hell am I buying this anywhere in here. I'm not doing it. I think that's insane. But with the positive news, that makes this setup an actual great trade. Without news, this is a horrible trade, right? Just buying off that 90 MA right there. So that is the little nuance pieces, and that is the contextual understanding of what's going on um, when you're reading price. And I think if we spent more time reading price and less time kind of focusing on these external things, like maybe different indicators, obviously I'm using 90 MA here, but if we're looking at, let's say, volume profile, or if I'm like studying um, who knows what, right? You kind of miss the nuance in the setup. You kind of miss the little details that you need to focus on. Okay, hopefully that makes sense. So from now on, I'm going to be giving you guys a just different setups and kind of explaining like different things to look at when looking at them. But I think it is super important, more important than any of that, the setups I'm going to give you, or that I already gave you, is context and nuance. They're different, but they're equally important. Also, just want to be clear, if any of you guys follow me, you probably also follow Merritt Black. In my opinion, one of the best futures traders out there. And he talks about context a ton in his trading. And he looks at context a bit differently than I do. It's still the same thing, right? So this bigger picture idea. However, he looks at it differently. But it's still the same thing, right? Him and I are both doing the same things. Context matters. If you're trading without context and without these little bits of nuance, the odds of you succeeding at trading, I'm just being 100% honest from my own experience, what I've seen is basically zero. If you just think you're going to show up, press a button, there's something technical that you're missing out, or some secret sauce, that does not exist. The secret sauce is in the context and the nuance, especially when you're looking at futures. Equities, obviously, it's important as well. Crypto, same thing. But hopefully this made sense to you guys. Hopefully you picked up something from this. This is kind of the video that is really hard to teach and kind of illustrate. So hopefully I got the point across. If not, let me know in the comments like what something, maybe a different way that I could explain to help you guys understand. But just try to spot the little things, right? Don't worry about the setups. Don't strategy hop. Don't do all that. You don't need to do that. Focus on a couple of strategies, a couple of different setups, or maybe one strategy with a few different setups inside of that, and just try to really spot little differences, right? Nuance, context. Nuance and context. All right, guys. I appreciate you watching, and I will talk to you later.